All right. 12 o'clock. Let's get started. It is time for your weekly prop trader market update hosted by me, Derrick Oldensmith. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. Position disclosure. I think I'm in about 16 positions right now. Basically, everything's hinging on market upside continuation, I guess, except the AMC short. Seen a little weakness in AMC earlier today. We can talk about all that. So I have been with T3 for over a decade. I'm currently senior trader and registered principal for T3 Trading Group. I've mentored well in excess of 100 professional traders here at the company. As a matter of fact, I think I'm currently working with a group that's in excess of 100 traders. In my spare time, big into martial arts, big into skiing, and just love markets. That's really my big focus. So I'm going to be talking about charts, stocks, markets, all the good stuff. Probably give a little update on short squeeze stuff that we spoke about last Tuesday. And then I'm going to dive into how you can become a part of my team, my community, how you can become a professional trader with T3 Trading Group. At any time, feel free to email me. Here's my email address, doldensmith, first initial, last name, at t3trading.com. I'll be happy to speak with you myself or have one of my teammates establish a chat with you. So let's go to the charts. Let's see what's going on in our marketplace. So once again, we want to start big picture and work our way down to small picture. Friday was a big warning candle. So we had kind of drifted a little bit lower into Friday. First of all, the end of August, beginning of September is historically a couple of the slowest weeks of the year. We saw really tight sideways price action for, 8 trading sessions or so in a row here. Then we started to drift lower, and then that accelerated last week, a little bit on Thursday, and then in a much bigger way on Friday. Friday was the first day that we saw ranges start to pick up a little bit Friday last week, and that coincides with us beginning to get through that, kind of holiday weeks that are coming in at the end of the summer every year. So Friday was a pretty big down day. It was a negative Maribozu on higher volume, right? And maybe this can just be the simple lesson of the day today, because I always try to impart a lesson on you guys each week with these webinars. So we had this negative Maribozu that was on higher volume, and then the next day, which is yesterday, Monday, we gapped up like 0.7% or so in the S&P, which was a decent percentage of that negative Maribozu. That's not a gap up that you want to buy. So let's discuss this a little bit. So negative Maribozu on higher volume, what does that mean? What is this candle? A Maribozu, by the way, is a Japanese candlestick that has little to no tails, but a large body. So we know that for basically the entirety of the candle here on Friday, sellers are in control. It opens up with sellers in control at highs, it closes, sellers in control at lows. So usually the expectation there would be to expect some sort of continuation to the downside, because we know sellers are in control all day. Now we got to keep that with the context of all the other information that's out there. We know that the S&P has been in a big picture uptrend. So most likely that big picture uptrend is going to continue, and this is a pullback within the confines of that bigger uptrend. So that would be kind of the big picture expectation, but all the same, this candle on Friday is a big warning candle, because we know sellers are in control. We know that the volume came in big. And whenever you see this type of candle, negating that candle is important. How do you negate a Maribozu? Basically by getting to the opposite side of it. So if the buyers are ever able to come back into the S&P and get the market above this high, so get the SPYs back up to above 450, 149, then you know that every single person who sold on this day, whether they were a short seller or a long seller, was wrong. Short sellers are out of the money. They can get squeezed. Long sellers potentially come back in and chase the market. And if they're not coming back in and chasing the market higher, they're kind of at the very least not on the offer anymore, creating supply from booking their profits because they already sold. So when you can negate a negative Maribozu like this in a bull trend, that's usually a recipe for higher prices. But first you have to do that. I kind of call this candle like a penalty box candle. like, yeah, we're still in an uptrend. The market is still overall bullish, especially if the SPYs are above 446. I'm really considering the market to still kind of be in bullish category. We know that the NASDAQ, especially as long as it's holding above 375, is really bullish. But at least on a small time frame, it puts it in the penalty box. So now, yesterday I come to the office, and really once again today, but yesterday I come to the office, and the market's having a pretty big common gap. That's the type of gap. A common gap is also sometimes referred to as an area gap. It's called a common gap because it's the most typical type of gap that you see in the marketplace. A common gap is basically a gap that occurs within previous price congestion. So we see a large common gap higher in the market. We know that common gaps tend to get filled, and we also know that this candle here with the sellers that came into play kind of has the market, as I was saying, a little bit in the penalty box. So what I was advising my team yesterday morning was, guys, we really can't come in and be too aggressive here. And honestly, that's on both sides of the market. We don't want to come in and be buying because of everything I just discussed. A common gap higher after a higher volume negative Maribozu usually means that gap is going to get filled. We also want to be a little bit careful on doing much short selling, because on the short selling side, we are still very clearly in an uptrending bull market for the SPYs. So basically, yesterday's price action was telling me off the open, less is more. And understanding, by the way, I never made myself bigger. I make myself bigger so you guys can see me. Understanding, by the way, that less is more when it comes to the price action is a big part to successful trading. You need to know when to be aggressive as a trader, and you need to know when to do the opposite, when to kind of sit in your hands a little bit more and be a little bit more defensive. That's basically what yesterday's gap was telling us. Big common gap higher here in the market. Let's be defensive, and look what happened. The buyers are not motivated to buy in this type of gap up. Why would they? It's 0.7% higher than where they could have bought on the close on Friday. Any sellers who were trapped, or any longs who were trapped, are coming in and they're being sellers. Short sellers who want to get heavier are utilizing that gap up to get heavier, right? So basically this type of common gap higher creates a supply and demand dynamic where there tends to be more sellers than buyers, which drives it back down. Basically the exact same thing happened today. We had a common gap higher, that common gap got filled. Now we're trying to bounce a little bit. Today's a little bit different though, because the gap higher really occurred because of the CPI number. CPI number came out. It wasn't as bad as was expected, so that actually initially pre-market caused the market to pop a little bit. And we could see TLT was also higher by the time the market opened, so interest rates are a little bit lower. So that tends to not be as good for like the IWM, even though the XLF and the XLE showed incredible relative strength yesterday. The TLT had a run today. So TLT, big move higher after that CPI number. That means interest rates down. Generally, that tends to be better for tech than it does for the IWM. And we are here, seeing that the Russell's down 0.4% right now on the day, while the NASDAQ is positive. So we are seeing relative strength from the NASDAQ, which is what you would expect based on this interest rate movement. Interest rates are really key to this market right now, so we need to constantly be paying attention to it. But I guess the big takeaway, if I can impart one little lesson from each weekly update that I do on Tuesdays, it's a kind of a combo pattern here on understanding gaps and understanding candlestick analysis. I consider candlestick analysis to basically be a subset of technical analysis. Technical analysis is usually about understanding the supply and demand makeup of chart patterns that consists of multiple candlesticks or multiple periods, whereas candlestick analysis is actually about analyzing individual candlesticks, but we always want to be doing that within the context of all the other technicals that are going on there. The team and I, we're definitely continuing to focus on some of the short squeezing opportunities as they present themselves, but I had spoken about this last week. There are risks, right? There are risks with these companies. Like, look at this SPRT. Had this big short squeeze run up from $8 to, can't even see the high of the chart, 43. Huge run higher. Let's see if I can bring this up. I don't know how I did this the other day. Anyway, we saw a huge run up there with this SPRT, just as an example, several others as well. Stock basically went from a low of $8 to a high of $60 over the course of about 4 trading sessions or so. If you're able to be early in these because you're recognizing that volume is coming in fast and you're taking advantage of it, you're seeing the option flow come in, that's fantastic. But we also don't want to be buying these when they're too extended from that equilibrium area after they've already had that big run. A lot of them are heavily shorted for a reason. And even though that short squeeze can occur, once the short squeeze is over, a lot of times they come back to earth really quickly, especially if you're seeing a stock that has like a secondary offering where the stock rips higher and then management uses it as an opportunity to implement the secondary to raise more capital. We see that happen a lot. That's not actually what occurred with SPTR, but we did see that happen with like actually it wasn't ATER. ATR is another one of those squeeze names that's getting wrecked today. But one of the other short squeeze ones, it's actually escaping me which name it was off the top of my head. We saw it came out with the secondary and they whacked that thing all the way back down really quick. But we can see ATER, here was another one. They squeezed this thing from 4 to 19, and look at this candle today. They're just wrecking it all the way back down after the volume maximized when it got extended. So that's like I said last week, these can present huge opportunities, right? You're looking at a move from $4 to $19 over the course of like 2 weeks. Huge opportunity, but there is also risk when there's opportunity. You don't want to be late. You don't want to be marrying these stocks. You don't want to be a bag holder for when they actually have a pullback. So you got to make sure you're managing risk, because when they pull back, it can be vicious. Look at this ATER, down 32% on the day thus far. All right, so I guess that's the kind of the quick little market update with everything that's going on right now. The bears are definitely trying to make a little bit of a stand here over the course of these last couple of trading sessions, but we're approaching back into that bullish uptrend that we've seen hold consistently. So let's see if that's able to happen again or not. We are still overall in a bullish market, but I would say that bull market is a little bit in the penalty box, as I described earlier. I guess with that said, let's talk a little bit about prop trading with T3 Trading Group. Whoops. T3 is one of the largest proprietary trading companies in the United States. We have hundreds of licensed professional accounts. We've got different physical offices. I'm in our Manhattan office right now, but all the traders have actually been working remotely still because of the COVID situation, and that's been going really well for the team, having access to the virtual trading floor that we run here. Communication through the VTF has been fantastic, so it's been a fantastic community to be a part of. To become a professional trader, since T3 Trading Group is licensed, regulated by FINRA, SIPC, the SEC, that means that traders have to become licensed. You have to pass an SIE, Security Industry Essentials examination, and a Series 57, which is the Professional Proprietary Traders examination. You also have to pass a background check before you can even take those licensing exams. So that, I would argue, is kind of the downside of being a professional trader. You do have to get through those tests, but the upside is more than worth it. We actually have 4 different software options: Lightspeed, Tachyon, Sterling Trader Pro, and Wolverine that you can trade on. Personally, I've been trading on Lightspeed for over a decade. A lot of people like Tachyon as well, so we're onboarding people pretty rapidly into both of those softwares. We have equities, futures, options on equities, options on futures. So whatever your fancy is, we can probably work with you on it. Personally, I'm specifically an equity trader. That's my focus. I think options trading makes a lot of sense if you're in a retail account because of the natural leverage that's inherent in the product. But for myself, on a professional account, the amount of capital access I get, I always ask myself, well, why do I want to trade options, which are a less liquid product and subject to time decay, just for capital access when I already have as much capital access as I could want? But all the same, we do have options traders here at the company, so if that interests you, let me know. New traders should be aware that training and development is something that we pride ourselves on here at T3. My team and I are doing a daily morning meeting every day at 9 a.m. Eastern, an afternoon meeting at 10 after 4. Every afternoon meeting ends in a group Q&A session. There's an optional 1-month training program when you first join us. All that's for free if you're becoming a professional trader with us. It's on a system that both new traders and experienced traders get a lot out of, and you'll have access to it just because we want you to be as successful as possible. You will be required to fund your account with a capital contribution. What we typically do on our end is start by providing buying power at 20 times your contribution for equity day trading 8 times your contribution for overnight positions, and then you're compensated through a profit split. And if you're an experienced trader, we're a great spot to work with also. If you want to put $1 million into an account because you want access to $20 million, it's probably not a problem. Just reach out to me and we can discuss deal terms. And you get access to all of this cool stuff for free. My virtual trading floor is called the Pro Desk. My training program, Scott Ruther's virtual trading floor, Scott Ruther's All Access newsletter. You're going to get all that for free by being a trader with T3, because once again, it's as simple as the fact that we want you to be successful. So we're willing to give up some on our end to help get you there. So again, if any of this interests you, here is my email. Don't hesitate to reach out. They keep me pretty busy, but I'm a pretty nice guy also, so you got nothing to worry about. Oldensmith at t3trading.com. You can learn about becoming a professional trader with my team. You can also reach out to info@t3live.com if you're just interested in getting involved with the Pro Desk VTF through a subscription. All right, so little bit of a quick meeting this week. Got a bunch of positions on. I got a couple meetings coming up pretty soon that I got to take care of. But we still were able to cover, I think, a really solid lesson. So hopefully you guys can take that trading lesson, really understand the dynamics of that candlestick analysis combined with gap analysis that we were able to do yesterday that made and saved us a lot of money for myself and my team. And again, become a part of the team, because that's really where you're going to make your learning go to the next level. Reach out to me, Oldensmith at t3trading.com.